Cases made for a disappointing record of earnings may be corrected by the advent of new conditions, or the adoption of new policies, or by a change in management. An important new factor in recent years has been the acquisition of smaller companies by larger ones, usually as part of a diversification program. In these cases, the consideration paid has almost always been relatively generous, and much in excess of the bargain levels existing not long before. When interest rates were much lower than in 1970, the field of bargain issues extended to bonds and preferred stocks that sold at large discounts from the amount of their claim. Currently, we have a different situation in which even well secured issues sell at large discounts if carrying coupon rates of, say, 4.5% or less. Example: American Telephone and Telegraph 2 due 1986, sold as low as 51 in 1970. Deere & Co., 4.5, due 1983, sold as low as 62. These may well turn out to have been bargain opportunities before very long, if ruling interest rates should decline substantially. For a bargain bond issue in the more traditional sense, perhaps we shall have to turn once more to the first mortgage bonds of railroads now in financial difficulties, which sell in the 20s or 30s. Such situations are not for the inexpert investor. Lacking a real sense of values in this area, he may burn his fingers. But there is an underlying tendency for market decline in this field to be overdone. Consequently, the group as a whole offers an especially rewarding invitation to careful and courageous analysis. In the decade ending in 1948, the billion-dollar group of defaulted railroad bonds presented numerous and spectacular opportunities in this area. Such opportunities have been quite scarce since then, but they seem likely to return in the 1970s.